Hey, 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 happy Wednesday, everybody. It is cloudy fall, a cloudy fall Wednesday, still beautiful. I was outside quickly for a little walk. It's actually really nice outside. Welcome back to the Real Deal Pod with Allister and Geoff, where we bring you the latest insights and updates on the real estate and mortgage updates. My man, Geoff, how you doing, buddy? What's going on?
You know what? Rinse, repeat, rinse, repeat, rinse, repeat. So we're just
Right?
in Wednesday, came off of a DLC group university event yesterday.
Beautiful.
Lots of information from our chief economist, Sherry Cooper. Just my brain is overflowing, but excited about today's pod. So I'm looking forward to chatting about it and all what it entails.
Yeah, it's actually pretty crazy. It's been a busy little bit for me. I was able to actually take a Sunday morning to relax and enjoy some time with my wife. It has been so busy that I haven't been able to do that for the past little bit. So just quickly, we watched the documentary on Netflix called Martha, right? About Martha Stewart. And if for everybody listening out there, if you've got Netflix, watch that documentary. I love Martha Stewart, not for the reasons that most people, maybe some people like Martha Stewart for the cooking and all of that sort of stuff. I love her because of what she's done with her life. She was, for people that don't know, she was the very first American billionaire woman,
Well,
sorry, female. Yep. The very first American female billionaire. So, and self-made,
and a
self-made.
convicted felon.
Listen, when you actually understand and listen to the story, no, listen, she should never have gone to jail for those 5 months. That she did nothing that nobody else does. And if you actually listen to the story about behind it, you'll understand that she probably shouldn't have gone to jail for it.
I'm gonna
So it's
watch it.
one of
I'm
those
gonna
things
watch
that they did it in order to bring her down. So for everybody out there, take the time, take a nice Sunday with somebody cozy or yourself, cozy up on the couch and watch it. It's an amazing watch. But the reason that I have been so busy, Geoff, and I think this is the reason you are excited for this pod, man, October's numbers came out, baby. And after a 5 month slump, we are back on the rise. And we talked about this, Geoff. We talked about it. We said it's going to start happening, and it's going to start happening out of nowhere, and it's going to catch people off guard. And it's beginning. So I wanted to get into the numbers a little bit today. And then and then quickly after that, I also read this other little interesting article. It was the UBS Global Real Estate Bubble Index came out. I'll explain what that is later. And it what it does is monitor bubble cities, right? And bubble cities, of course, it's cities that are on the verge of what could be a correction. And there were just some interesting statistics that came out, and that kind of mirrors what's going on with our market right now. So, anyhow, we saw a jump in home sales, guys, a 35% increase from September. 35% increase, which is 37% year over year. That's right. We went from a cautious buyer sitting on the sidelines market now into a surge of activity. And what is
I
the
want to
reason, Jeff?
jump in. I don't want to ruin your flow here,
Go ahead.
but I think it's also really important when we see this increase, which is
Sure.
substantial,
Yeah.
is that number one, we're coming off of 10-year lows,
30
right?
year. Yes, that's what I said. 30, that's what I'm saying. But the thing is, it's still 37% over LY, which was still considered a down market.
Right.
So
So
that's
yeah,
my,
I had a conversation with my buddy this morning when we were out on a run,
I
and
knew that's why you want to do this.
and you know what? It's great. The mentality of it is shifting,
That's what I'm
but
saying.
when you take a look at it, at a bird's eye view, what is it up to what the average is? So
But what you
again,
got to look when you're looking statistically at a business and you're looking at LY, you got to also take into the account market, right? The seasonal market. So of course, right, October is a slower market as well, right? So the fact that we are still have been down, right, over the past 30 or over the past 5 months, 30% lows over 10 years. The fact that we've increased 30% over LY is actually a big deal. It's the same thing that we've been saying about Chilliwack, right? We've been saying with the market everywhere had been seeing 30% less sales, but we were lauding Chilliwack for being up 19% over LY, even though everybody else was suffering 10-year lows. So that's what I'm saying, Jeff. We got to speak out of both sides.
I
We
know, I
can't
know. And
we
for
can't
me,
say Chilliwack's amazing, right? And because they're doing well, and then say, okay, but yeah, we're doing good now. But hey, look how low it's been, right? It's the
yeah,
fact of the matter is we've seen an increase, and a lot of it is starting to be, and a lot of it is because of the rate cut. And so this is the part. This is you're almost starting to fall back into what other people do and making excuses as to why this is happening. And you're going to wait yourself out of the market, Jeff. It's going to get out of control, and it's going to get out of control under your feet.
no, no. My point of contention is this, is that yes, we are up 30 some odd percent over
Yeah,
last year. But I'm more interested to say, show me the last 3 years, show me the last 5 years, and what are we up and compared to then? And when you do those numbers, we're just back to where we were, right? So here's also where I go with this is that, you know, this is good news. We need this
sure,
because people start to hear it, then people start to get activated, right?
sure,
Um,
yeah,
and I used to say this to my financial advisor all the time is like, well, you're up over last year. Well, yeah, but last year I was down, 12%, and now I'm up 7% over last year. So that's why when I get a little bit triggered when I hear these numbers, I was like, okay,
but
like let's take a bird's eye view. But I
sure,
agree. I know you're itching there,
but
Alistair. I know you're
yeah,
itching, but
no, yeah,
but the positive uptick on it is that people are starting to become excited
sure.
again and
And
starting
that's
to
it.
jump back into the real estate game.
And that's it. But what I want people to always remember though is from 2000 to 2022, which is over 2 decades, right? Canada's real estate prices have soared, driven by rapid population growth, right? Financing, strong investor interest. It created a perfect storm, right, of demand. It
Even what
pushed
3 years
property
ago,
values to
3 years ago with COVID.
unprecedented heights, right? So that's the deal. We are still looking through a lens of a past 2 decades where things got ridiculous, right? And we were bound for some sort of a correction. So that's why when you start now looking at LY and starting to see that positivity, that's where you're seeing the change, because you're looking at it at a lens of 20 years of ridiculous growth, stupid growth,
Well, even if you
right?
look at the lens of 5 years, you're taking a look at the
Sure,
COVID growth too, right?
that's what
Which
I'm
is
saying. Exactly. So when you start looking at it through that lens, yes, like a over LY, this is a big change. And I'm a true believer, and I'm sure you are. Those interest rates now are really starting to drive that. And even like Jeff Chada, right? He's the chairman, right? He even said, like, let's be cautious, right? And continue to watch, because we still do have buyers on the sidelines, and we're waiting to see still what happens with the interest rate change in December,
yeah. Yeah, I
right?
think I think this actually market has been slower than what a lot of people anticipated because we have seen 5 Bank of Canada rate cuts, right?
Mm-hmm.
Um, and we haven't seen the movement in real estate that was expected with these rate cuts. And to your point, I believe we're going to see another rate cut here in December.
Yeah.
There's a lot of economists that believe it's going to be up to 50 basis points. But again, I think that's largely going to be determined by what Canada's unemployment rate is going to be looking like. And I think that announcement is coming out this Friday. And also, what's going on across with our southern borders with the US and what's all going down there.
Yeah,
So
it'll be interesting.
so yeah, I believe that people were waiting. I
Yeah.
believe that people typically fall is a little bit slower. And I believe once we see this additional rate cut here in December, we're going to have a crazy, crazy spring market, which are going to flip it from a buyer's market back into a seller's market. And again,
Oh,
folks, anybody that's on the fence right now about purchasing property, this is Black
oh,
Friday. This is
oh,
this
yeah.
is your Boxing Day. This is where you need to start getting out there now because you are not going to be in this environment for much longer.
Okay, hold up. Okay, so you just mentioned buyer's market. So hold up, Geoff. I got more numbers to get through. And then you can see if you've changed your mind on this, right? So like new listings, we saw actually a slight dip down, about 5% down from September to about 30, what was it, 3,194. But compared to last year, they're actually up 26%, right? So now what we've got is a sales to active ratio of 15%, which is right in the sweet spot of that 12 to 20. We're in a balance now.
So let's break this down into simple language for
So
simple money.
the sale. So what did I say? We had 1,330 sales, 3,194 properties listed. You do the math, right? And now that's where you're at 15%. That's your buyer's market. That's how many properties sold. That's the percentage. You're in your buyer's market. So that's just quick breakdown, easy math. But that's what I'm saying. We can't say we're in a buyer's market anymore because that just shows us we have now quickly slid from that 10% that we've been talking about that we were in. We actually even got down to 9, right? Up to 15.
Yeah. So we're sliding into a seller's market now.
Super fast.
Yeah. Well, that's what I'm saying.
Super fast.
I'm proving
We're
you're
not even
proving
in
my
spring.
point.
We're not
You're
even in
proving my
spring.
point.
But you called it a buyer's market. That's why we can't call it that because we're in balance now. If we say we're in buyers, then that just means we're at like 9 to 12. We're at 15, right? So we're off 6% if we're telling people that we're in a buyer's. We can't do that to people, right? So like that is and the big
I still feel that we are in a buyer's market. I do feel that
no,
that is
we are
slipping
in a
away quite
buyer's
quickly.
season.
Yeah.
We are in
Okay.
a buyer's season. We are in a balanced market, right?
Okay. I can agree with that.
Yeah, we're in a buyer's season. Yeah, and so, but the interesting thing is, we saw a little bit of its. Another interesting story. We saw a little bit of a price decline. So we saw by about 0.7% in total. So if you broke it down by property type, single family detached are now the average value is 1.488 million, which was down 0.9% from last month. Townhomes now are 832,000, which is pretty much holding flat, and condos dropped down to 543,000, which is just a slight dip, as well. So overall, prices are adjusting, but not drastically. So like that's where we were saying before. We were saying like sellers were holding firm and not moving. It basically they kind of did their job, right? They kind of saw and the rate cuts have done their intended job, I guess.
Good.
Crazy, right?
Crazy.
Right? But here's now one thing. I was mentioning that UBS thing, right? So I was saying that UBS UBS is a global wealth management company, and what they do is they index all of the major cities, and they break it down into the top 25 cities based on housing bubbles bursting or increasing. And one of the most interesting things is there was 17 out of the 25 cities increased and only 8 decreased. And interestingly enough, because Vancouver and Toronto, obviously for Canada, are the ones that they focus on. Toronto had a decrease of 0.7%. That was really driven by condos, just so everybody out in BC land knows. There was a super big condo correction in Toronto. But Vancouver increased 5.5%. So I love when we talk about that bubble bursting. This is a global management company that indexes all of the major cities across the world. And again, a supposed bubble that we live in continually increases, right? It continually increases. So our bubble, this is what I want to tell everybody all the time. The bubble will never break. It may contract, it may expand, but it will never break. Yeah. That's my message with the bubble. That's my message with this report.
And to confirm, we're talking the housing bubble.
Yeah, it's the housing bubble. Yeah.
Yeah. I know.
Yeah. Of course, that's what it meant.
I'm slow.
Yeah, no, of course.
I just had to make sure that we're all on the same page.
Yeah. But so here's a couple of things. One other couple of keynotes. Dubai, they led the way with the fastest annual increase in home pricing. They increased by 17%. Yeah. And that was mostly driven by, of course, influx of residents attracted by its favorable tax policies. Yeah. And financial stability and modern infrastructure. But similarly, Warsaw, they saw double-digit growth as well in home prices, and theirs was bolstered by government housing subsidies.
Okay.
Yeah, so that was actually super neat. So it was two sides, right? You know, like a lot of private growth, right? Stability, no taxes, and all that good stuff. Saw the biggest growth. But then you saw Warsaw that was right behind them, and that was driven by government housing subsidies, and that drove their housing bubble. And in contrast, Hong Kong, they experienced the largest decline at 13%, and that was due to weak population growth and sluggish demand.
And what was Canada again?
Well, Canada, we were at 5.5, or Canada Vancouver was 5.5.
Right. Yeah.
And Toronto was 0.7.
Yeah,
crazy.
It's very interesting.
Those are some crazy numbers, but that's what I mean. Like, just the last on that bubble, man. We got to stop thinking about, hey, the bubble's going to break. It's got to burst. It's going to happen. Again, it will always contract. It will always expand, but it will never break. It is literally driven by human emotion. So it is driven by consumer confidence, and that's why it will never break, because consumer confidence will never break in housing, right? We will never disbelieve in housing. So,
yeah. Well, which actually, I want to jump into a story here because, and I think
this is a fear thing that you were telling me about, right?
It's a who story?
The fear thing that you were telling about those clients? Yeah.
And I wanted to share a story because I think a lot of us work in fear. A lot of us basically listen to what the media is telling you and don't necessarily do a lot of due diligence going behind that and digging into what things actually really mean and how things really kind of break down and what it does as far as to affect you. Because again, we are very short-sighted, I believe. Very few of us will look things past what they see, what's in front of them, and really break it down to say, hey, is this actually really what it looks like? And I just got off the phone with a client, did a pre-approval, and she's in the process of now putting an offer on a condo. So we give her a phone call, we update all the information, and we're talking about purchase price, and we're going down, and she's like, well, I'm like, well, what's your maximum purchase price? Like, what's the most you're willing to spend on this property? And she goes to me, well, you know what? The maximum I'm going to do is $410,000. So keep in mind, this is a condo here in the Fraser Valley. And then I'm like, well, what is the purchase price? Well, the purchase price is 429, but there's no way I'm going to do that. And I said to her,
Sorry.
I said, look, you know what? At the end of the day, the market is going to dictate the price. So you might have 410 in your mind. That might be what you're going to get it for. But understand that there is a fair market value. Your realtor is going to tell you what that fair market value is and what this property should be really, what this property should sell for. And this is your realtor, not the seller's realtor. This is what your realtor is going to advise you on what this property is worth and what it should sell for based on comparable sales over the last 90 days.
Yeah.
And maybe you're going to get it for 410. Maybe you're not going to get, give the full asking price of 429. But at the end of the day, understand that if 410 is your ceiling point, the maximum you're going to do, but the fair market value is 425, understand that you're probably not going to get an accepted offer unless there's a life event going on. Maybe there's a divorce, maybe there's a death coming up in the family, or someone's not doing well. It's going to be very rare that you're going to get this for less than what the fair market value is, unless there is a life event that is going on. But more importantly, let's break this down into a language that you understand, because you're looking for something for 410. These guys are asking for 429. There's a $29,000 or a $19,000 gap there. So this lady's like, there's no way I can afford $19,000. Like, I can only afford 410,000. I cannot afford 429. And this is where I go, is that you have to ask better questions. You have to work with people that can, fluff away the gravel and get to the gold kind of idea.
Right. Understand the bigger picture.
Understand the bigger picture. And I said, look, okay, based on a $410,000 purchase, less your down payment, what your purchase price wants to be, your payment, and I'm just going to paraphrase, is going to come to be $1,363.
Right.
Sorry, $1,258. So let's go on the opposite side. Say, this seller is not going to move. They want the full asking price of $429 with your down payment. That payment is going to come to $1,363. So again, I'll just top it off. That's $100 difference that's going to be from the price that you want to the full asking price. $100. I said, can you afford $100 a month? $100, that's it? Yeah, that's it. It's $100. And she's like, oh, well, I can do that. But she was so focused on the 19,000, the difference. And here it is, guys. And this is where I say walking in fear is, do not let, in this lady's case, is do not let $100 prevent you from buying the homes that you want, because you want to buy it for 410 and the seller wants to sell it for 429, right?
Geoff, what did we just say? I'm going to pause you just for 1 second, because we mentioned on the last podcast, we talked about wealth gap, right? And we said, what did we say? A person under 35 and under who owns their own property is worth $453,000.
Yeah.
And somebody that is 35 and under who rents is worth $44,900. Yeah. Tell me what sense that makes for somebody to not want to invest in not just their home. It's not just an investment they're thinking of, but a home, so that they generate that wealth. That makes zero sense. But go on.
Well, and we said this before, your home is your biggest piggy bank, right? 35, that age gap, that 35, owning a home, and again, 400,000, not owning a home, 40,000 or 11,000, right?
No, that was 55 to 64. 55 to 65. So 55 to 65 was $1.4 million. And then if you're a renter, it was 11,900. If you're 35 and under, 35 and under, 453. and then $44,000 if you're a renter. Again, crazy.
Yeah. So again,
10 times.
The whole idea of home ownership. And what it really came to me when I was explaining it to this lady is that, you're holding yourself back over $100 a month. And maybe you're going to get the place for 425. Maybe you're going to get it for, higher than the 410. But best case, worst case scenario, you're talking about $100 a month on an asset that is going to appreciate, depending on the year, anywhere from 2 to 10%. Right? I said to her, you're going to wait. This property next year is going to be worth X. I said, you're going to wait, understand just to what we were talking about right now. We are in a buyer's market. Sorry, I'm saying this again. I know we agreed on something, but you are in a buyer's market. Very quickly, things are going to change into a seller's market, and you are not going to have the ability to purchase this. And don't let it walk away from you over $19,000, which is only going to cost you $100 a month, more than getting it for the price that you're willing to do.
I'm going to summarize this because I'm getting really frustrated with that lady, because this is what I'm saying. This is what I'm hearing. She is allowing $100 a month stop her from increasing her wealth by 10 times.
Yeah.
That's what I'm trying to understand. That's the question that she needs to answer. And that's what I'd like to hear back. If you could get me that answer back, say the guy on my podcast wants to understand why you would stop yourself, why you would allow $100 a month to stop you from increasing your wealth by 10 times. That's madness.
This comes with a happy ending. So explaining this to her, making these seeing things a little bit more in a language that she understands.
Yep.
How do you think it ended?
Please tell me that from my heart, Geoff, that she made the right decision, and she said, I'm not going to let that get in the way of me increasing my wealth by 10 times, because that'll hurt me, Geoff.
Exactly. So you know what? She said, now that I understand it in a language that you presented it to me, I now realize it's not about the 19,000. I realize it's going to increase my monthly output $100 more than what I wanted to. And yes, it makes sense. But here's the other thing too, is we always talk about the importance of power teams.
Yeah.
Right?
Yeah.
Again, part of your power team is your broker, is your realtor, is your accountant, is your lawyer.
Yeah.
Why is this not coming from her realtor?
It should be, because we are a guide, in all honesty. And that's how I look. That's how I look at myself. I don't call myself a realtor, even though, yes, I'm a realtor and it's on the bottom of my signature and all that sort of stuff. I'm a partner. I'm here to advise you. You go to a when you invest in stocks, or you go to the bank even just to speak to somebody about your savings account, right? You go there for guidance and expect the best guidance possible to put you in a product that's going to make you as much money as it can, and where you're comfortable and all that sort of good stuff. And that should be a person's expectation on a realtor as well. A realtor is not somebody there to sell you a home. I'm telling you, you could do that on your own. You just have to get a contract from online somewhere, go to the lawyer, say, draw this up for me, right? And you're on your way, right? But
I'm picking on the realtor because in her power team.
But that's my point. That's my point, is our duty as a realtor is to be a guide. Our duty as a realtor is to provide her that advice, is to set up that scenario, is to tell her, listen, don't go to the mortgage broker to tell you that you're crazy to let $100 a month step in the way of increasing your wealth by 10 times. Like, that is what I'm saying. Like, that if that was my client, I would have had that conversation with them a long time ago. I would have said, if you don't believe me, just listen to our podcast. We talked about it, right? Like that is that is where I agree with you about the power team that we always speak of, because that is the guidance that she should have gotten before she even got to your door, right? At least that's my belief. That's my belief.
Yeah, exactly. And you know what? We in our power teams or in people's power teams, how many times have we got bad advice from a solicitor? How
Yep.
many times have we got bad advice from an accountant?
We get
How
burned.
many
All
times
everybody
have
gets
we
burned.
got, you know, there,
We get burned by bad advice from our friends. That's what I'm saying. We get bad advice from our parents, for crying out loud. Let's all be serious. Our parents didn't always give us the best advice possible. Come on, right?
right.
They gave us maybe the best advice possible at that time, but it's not always going to be correct, right? So you can't let one instance of something happen stop yourself from making the right decision. If you do that, you will never make any decision, and not making any decision is always the wrong decision.
And this is how I would like to wrap up this story, right? And even wrap up today's pod is, folks, do not let fear get in your way to increasing net worth. If you
Exactly.
are in an opportunity to purchase, now is the time to do it. Rates are correcting to where they need to be. We are coming up into a spring market, which is going to shift, not in necessarily in a buyer's favor. And always understand that your home is the biggest piggy bank that you're ever going to have. So the best time to buy Allister is when?
Is when you can.
Boom.
That's right, people. That's right. Well, my man, I think that sums it up. This was a beautiful pod. I loved it. And again, I hope this was valuable for all of you guys out there. Geoff and I always appreciate you guys listening, and we appreciate your comments, and always are trying to improve and get better for you. So please remember to like, share, and subscribe. Knowledge is power, and your home ownership journey should always be informed by the best, right? So until next time, everybody, stay informed, stay empowered, and most importantly, stay tuned. We'll talk to you all next week. Peace.
Y'all have a nice day.